On July 4th, 2025, President Trump signed the One Big Beautiful Bill, promising sweeping tax relief for seniors and working families. The headline claimed, "No more federal taxes on Social Security benefits and no taxes on tips or overtime pay." Millions of Americans, especially seniors and service workers, were thrilled by the idea of keeping more of their hard-earned money. The Social Security Administration even emailed seniors calling it a historic step that would let nearly 90% of recipients avoid federal tax on their benefits. The promises were bold and simple, fueling hope for major permanent tax cuts. But as with many big laws, the reality is more complicated than the headlines. The bill introduces new tax cuts, but not exactly as described. Instead of eliminating taxes outright, it uses temporary deductions, and not everyone qualifies. Understanding these details is crucial to know how you'll really be affected. Despite the hype, the bill does not actually eliminate taxes on Social Security benefits. The law couldn't change Social Security's tax rules directly, so those taxes remain. Instead, it creates a new temporary tax deduction for Americans aged 65 and older. This deduction applies to all income, Social Security, pensions, or part-time work, lowering taxable income, and potentially reducing or eliminating tax bills for many seniors. The deduction is $6,000 for singles and $12,000 for married couples. On top of the standard deduction, it's only available from 2025 through 2028 unless Congress extends it. This means the tax relief is not permanent and planning ahead is essential. For many, the result is the same: no federal tax on Social Security, but only for a few years. The details matter, especially for those under 65 or with higher incomes. The new deduction mainly helps middle-income seniors, those who owe some tax on Social Security but aren't wealthy. Nearly 90% of seniors over 65 will see their tax bills drop, with an average benefit of about $670 per year. But the lowest income seniors who already pay no tax see no change. Those under 65, including people on disability or survivor benefits, are excluded. High-income seniors also miss out, as the deduction phases out above $75,000 for singles and $150,000 for couples. About 7 million seniors will still pay taxes on their benefits. The new rule is targeted, not universal, and leaves out millions. If you're not 65 or your income is too high, your taxes stay the same. For those who qualify, it's a meaningful, if temporary, break. The bill also targets working families, especially those earning tips or overtime. While the president claimed all tips and overtime would be tax-free, the reality is a temporary deduction, not a full exemption. Workers can deduct a portion of their tip and overtime income from their taxable income, lowering their tax bill for 2025-2028. After that, the deduction disappears unless renewed. This offers short-term relief for millions in hospitality, retail, and other industries. The bill also extends the 2017 tax cuts, preventing a tax hike for many middle-class families. These changes provide stability for now, but the benefits are not permanent. Workers should plan for these deductions to end in a few years. The law gives a boost today, but its future is uncertain. These tax cuts come with a cost, about $30 billion less in tax revenue each year. That means less money for Social Security and Medicare, speeding up the date when their trust funds run short. Social Security's insolvency is now projected for late 2032 and Medicare's for mid-2032. When that happens, benefits could be cut unless Congress acts. The bill also adds $3.3 trillion to the national debt over 10 years with no matching spending cuts. This could mean higher interest rates and less funding for other priorities in the future. The bill sparked celebration and controversy. Supporters hailed it as a win for seniors and workers, putting more money in people's pockets and boosting the economy. The Social Security Administration's public praise was unusual and welcomed by many. Critics, however, called the president's claims misleading and accused the SSA of political propaganda. Experts warned that the bill's high cost and impact on Social Security and Medicare could create bigger problems down the road. The debate highlights the tension between short-term relief and long-term fiscal responsibility. For many seniors over 65 and workers earning tips or overtime, the bill means lower taxes for the next few years. Middle-class families avoid a tax hike, and some will see extra money in their pockets. But these benefits are temporary, set to expire after 2028. Planning for the future means not counting on these tax breaks to last. The bill's cost and its effect on Social Security and Medicare will need to be addressed, likely requiring tough choices ahead. The big beautiful bill offers short-term gains, but leaves big questions for the next generation. Subscribe, like, share, and comment for more.